Welcome to Tesla Daily.
Here's the latest from Tesla. First up, Tesla has decided to discontinue its autopilot feature.
Instead, they're moving to a subscription model for full self-driving, or FSD. In other news, they've launched a new Robotaxi service. And get this, there won't be any safety monitors on board.
However, it's not all smooth sailing. Cybertruck sales have dropped a staggering 48% this year.
Elon Musk has also hinted that we might see price increases for FSD in the future. On a different note, Lemonade has introduced insurance specifically for Tesla's FSD, and despite the dip in vehicle sales, Tesla's energy business is showing strong growth. That's your quick update on Tesla.
Let's dive into some recent developments with Tesla. First up, Tesla has officially discontinued Autopilot as a standard feature for new Model 3 and Model Y cars in North America.
Instead, they're pushing customers toward a $99 a month subscription for full self-driving, or FSD. This is a big shift in strategy, especially as Tesla faces declining sales and more competition in the electric vehicle market. They're looking to boost their recurring revenue through subscriptions. But the removal of Autopilot, features like Auto Steer, has upset many consumers, who now have to pay extra for what used to be included. This change comes at a tough time for Tesla, which has seen vehicle deliveries drop for 2 years straight. In 2025, they delivered about 1.63 million vehicles, down 9% from the year before, losing their title as the world's largest EV seller to BYD. Interestingly, this subscription model also ties into Elon Musk's compensation plan, which requires 10 million active FSD subscriptions for big payouts. Analysts worry this could push away potential buyers who are already dealing with rising EV ownership costs. Next, let's talk about Tesla's new Robotaxi service. They've launched it in Austin, Texas, without human safety monitors. This is a significant move in their autonomous vehicle strategy. It's a crucial step for Tesla as they aim to validate their self-driving technology. Investors seem excited, with Tesla's stock rising 4% after the news. However, there are reports that these robotaxis are still being monitored by a trailing car, raising questions about how autonomous they really are. The service is currently limited, and Tesla faces tough competition from established players like Waymo and Zoox. The success of this initiative is vital for Tesla's valuation, which heavily relies on their autonomous driving tech. Moving on, we have some concerning news about the Cybertruck. Sales plummeted by 48% in 2025. This drop reflects broader challenges in the EV market and increased competition. Tesla's overall vehicle deliveries have also declined, with total deliveries around 1.63 million, down from nearly 1.8 million the previous year. Factors like the end of federal EV tax credits and rising competition from brands like BYD, which sold 2.26 million EVs in 2025, are to blame. Plus, the Cybertruck's pricing strategy has raised eyebrows, with initial prices set higher than expected, causing a disconnect with what consumers want. Investors will be closely watching how Tesla addresses these challenges. Now, let's talk about Elon Musk hinting at future price increases for FSD subscriptions. He mentioned that the $99 a month fee will go up as the software improves. This has raised concerns among potential subscribers. Currently, only 12% of Tesla owners are paying for FSD, and this shift to a subscription model is crucial for boosting revenue.
But if prices rise, it might deter new subscribers, especially as they weigh costs against the current performance of FSD.
This pricing strategy is also linked to Musk's compensation plan, which aims for 10 million active subscriptions. In other news, Lemonade has launched a new insurance product that offers discounts for Tesla drivers using FSD. This is a sign of growing confidence in autonomous technology. The partnership could change how the insurance industry prices coverage based on driving capabilities. Lemonade's offering, which cuts per-mile rates for Tesla FSD driving by about half, could encourage other insurers to follow suit. This is great news for Tesla as they push for wider adoption of FSD. Finally, Tesla's energy business is showing strong growth even as vehicle sales decline. However, There's been some pushback from Chinese state media regarding Musk's claims that Tesla's FSD system would be approved in China soon. This denial highlights the regulatory challenges Tesla faces in one of its largest markets. As Tesla seeks to expand its FSD capabilities in China, they'll need to navigate these hurdles carefully. The future of their autonomous driving tech in China remains uncertain, and investors will be watching closely. That wraps up our look at Tesla's recent moves. Stay tuned for more updates. That's a wrap for today's Tesla Daily Insights. Thanks for tuning in. And just a quick reminder, this is for informational purposes only, not financial advice. Catch you in the next update.